Steve and Jeremy will normally be there. We might have other guests come in. Adam Bloomberg has volunteered. A couple of other, like Maddie Greenspan, might come in. Long story short is this is a little bit of an experiment, but we're just going to kind of go through it. You guys are welcome to. This is an open dialogue. In the future ones, these will be more of Steve and the co-host kind of talking through things, and the participants that are on the call are muted, but they can type in questions. This is a bit more of you guys can just jump in and ask questions, but we're going to try and get ourselves into that format. Does that make sense for everyone?
Sounds great, Christina.
Awesome. Yeah. All right, well, we are recording. Carl, you can go ahead and start presenting, and Steve, we're going to let you have the floor here.
Okay, I hope there's more to that. Oh, okay. All right. Let me just so I guess in my mind things, because I've looked at so many screens, things just make sense, and sometimes I forget that, you know, everyone has a learning curve. So I wanted to start with the most basic of basic things, which are just exchange rates. And I don't know if you're familiar with FX exchange rates or metals exchange rates, what have you, but I wanted to give some examples and literally go through from baby steps to everyone can calculate pretty much any exchange rate cross they want to by the time they're done listening. So to start, I just put up the cash prices earlier of the top 15. And if you could scroll, Carl, if you could scroll down one page, next is the top 30. It's really irrelevant. This is just literally a pricing mechanism. So let's move on to page 3. Now we're going to start with FX exchange rates. If some people are familiar with this, bear with me because I just want to make sure everyone is up to speed. So look at the British pound. It's 1.23, i.e. 1 pound is equal to $1.23. Now, if we can go to the next one, I start with examples. These are metals, and here I'm just going to kind of read through. Kind of what I was saying, with exchange rates and crosses, it's just one divided by the other, or, you know, A divided by B or B divided by A. I guess the most obvious one is there's something that many of us are familiar with because it's the native currency called the US dollar. So somebody says, oh, a Happy Meal is $5. A Bitcoin is $8,400. A house is $1 million. A car is $20,000. But we don't ever look at it the other way. We don't often say $1 is 1/1,000,000th of a house, or $1 is 1/5 of a Happy Meal. So that's kind of what I wanted to really spend some time just teaching people, that oftentimes you hear people on Discord or the chat box saying, oh, this price is moving from X sats to X sats. Well, sats are, and I learned this not barely 2 years ago, are Satoshis, which I guess are considered a measure of value in terms of a Bitcoin. If you'll notice, if you can scroll to page 4 for me now, or is it? So here's these are just, you'll get it when I start explaining this. So the euro is 110, i.e. 1 euro equals $1, $1.1. So what does $1 equal in euros? Well, just divide the other way. $1 is 0.909 euros, or 1 euro is $1.1. Moving on to the pound, 1.23 divided by 1, or 1 divided by 1.23. Now, I guess we're the closest thing to a SAT price in a major currency would be the yen, where 1 yen equals $0.0093655. You don't hear that quoted that way often. Now we'll move to metals. Here's kind of my area of expertise, and this would be the most obvious example. We say gold is $1,500 an ounce. Well, what does that really mean? It means you need $1,500 to buy 1 ounce of gold. So let's quote it like they would in a Bitcoin spread. So $1 is 0.00064 ounces of gold. Well, that doesn't sound like a lot of gold. Carl, could you go back like half a page to the silver part? Okay, so moving on, silver is kind of an in-between where I guess it'd be a smaller instrument with a larger Satoshi price, so to speak. So silver, 1760 divided by 1, that's how we always hear it quoted on CNBC, Reuters, whatever. Now, quoting it the other way, we don't hear it quoted too often, where 1 ounce or $1 buys you 0.0568 ounces of silver. Am I okay? So if we quoted everything in US dollar terms, it makes it, I guess, very friendly towards the investor, where if we quote it in gold terms and you say $1 is 0.000645 ounces of gold, kind of makes things sound worth a lot less. So when one says, oh, this cryptocurrency is 10 Satoshi, well, what that pretty low price. Well, what does that actually mean? 10 Satoshi is 1 divided by 0.0000001, which is 10 million. So for that little 10 Satoshi instrument, do you have 10 million of them? Because then you can trade for 1 Bitcoin. So we've gone over some basics in metals and exchange rates. Now, Carl, if you could forward 1 page. Now, here's where we kind of move from things that we're used to things where we might not be as used to. So we know that gold is 1504. We know that silver is 17.6. So it takes 85.49 ounces of silver to buy 1 ounce of gold, or exchange rather. Flip it the other way, 1 ounce of silver divided by 1505. 1 ounce of silver is 0.0116 ounces of gold. Now to what I think people actually wanted to hear about instead of Steve's random crosses. So here were the prices of certain cryptocurrencies earlier today. I don't know if they're still there, but I just wanted to keep them at a static price so these examples would make sense. So 1 Bitcoin, Bitcoin is going to be the measure that we're focusing on. So 1 Bitcoin equals, notice how I wrote 1.000 and everything has 8 decimals. That's because that's how far the Satoshi measures go out. So it may seem, why did he put one US dollar equals 1.0? You'll see in a second. Carl, if you can move 1 page forward. So this was from Binance at about the same time. So this is Ethereum divided by Bitcoin. Now, you don't actually need, after I give you the cash prices, you won't really need that. You won't really need to see the screen anymore. You'll be able to tell. So just remember, it's 0.0212. So if you could go back 1 page, Carl. Now, if one were to divide 176.7 divided by 8278 on all of your calculators, you're going to get 0.021. And if you can go forward 2 pages now. So here are the examples. Bitcoin's 8278. Well, we know that. That's how it's quoted. So what does $1 equal? Well, $1 is 0.00012 0.08 Bitcoin. So $1 in Satoshi terms is 120,802 Satoshis. Everyone follow that? Any questions so far? No? All right, I'll keep moving if not. Now we'll go to Ethereum. 1 equals 176.70. I know these seem obvious, but from what Christina told me, I wanted to just start at ground zero, and that way people can look back at these examples if they have a question. And like I said, it may seem very basic to many, but you know, this is, if you're not familiar with exchange rates, so 1 Ethereum is 176.70, $1 is 0.012. So multiply the dollar amount by the Bitcoin Satoshi, by the US dollar Satoshi amount, you get the Ethereum Satoshi amount. And we do the same thing with Litecoin. 1 Litecoin equals $55.78, but that's actually 10 million. So that would be, I should have moved the decimals all the way out, but moving on. So now you can calculate that these exchange rates. So 1 Litecoin equals how many Ethereum? Well, we know what Ethereum equals in Bitcoin terms. We know what Litecoin equals. So 1 Litecoin divided by 1 Ethereum equals 0.31. So that implies that you need a little more than 3 Litecoins to equal 1 Ethereum. If you can go one page forward, and the other way, you divide Ethereum by Litecoin, and you get that you need 3.16. So this, I guess me talking on this part, it probably bored some people. I get it. It's, if you know this, it's pretty boring. If you're not familiar with this, I would urge you to take a screenshot and, you know, go to Coinbase where you can't see the spreads, but you know what $1 is. You know what $1 equals, and you know what 1 Ethereum or 1 Bitcoin or 1 Litecoin equals. So therefore you can calculate all the spreads just knowing that. And once you know what Litecoin is and what Ethereum is in Bitcoin terms, then you can just divide those two. And you can do it with those, it's easy because they're all on Coinbase. But with some of the less liquid names, like some in the top 30, like a Dogecoin or others that are popular trading pairs, this is just a tool so all of you can essentially know the fair value of any cryptocurrency before you make a transaction. And whether this is for trading or this is for learning or it's for coding, I think that's probably the most important tool I can teach you on day one, because if you have an idea of what the fair value is, then you can tell if the market is skewed one way or skewed the other. And you can look at one exchange and say, oh, wow, the Ethereum is trading 5% less on ABC exchange than it is on Binance, or it's trading cheaper on XYZ exchange than it is on ABC. And like I said, I know last week I touched on a lot of this and probably flew through all of it. So I wanted to slow it way down and just give some basic examples so you can see how many Ethereum it takes to buy an ounce of silver, or how many silver ounces does it take to buy a Litecoin. And you can just create all these kind of crosses, which is what we, not exactly a correlation matrix, but you can essentially just create a present value matrix and see what's appreciating versus other things. Like Bitcoin was up, other things were down. Well, gold and silver were also up, and Palladium was up, but many of the other alts were down. So we can probably use some of these basic tools to help us in a correlation matrix. That is all of my prepared comments for right now. But Christina, if you have other questions, I am happy to answer them.
Sure, we have a few comments in the chat section. First, I'm actually going to skip Dennis's because we'll get into it. But Thomas says a Satoshi is 100 millionth of a BTC. I think I heard 10 millionth earlier. So just clarifying that it is 100th million. That is correct. Is that correct, Steve?
That is correct, because the highest correlation to any asset named Bitcoin without being Bitcoin would be 0.9, 8 nines behind the decimal point. And that would be as close to a Bitcoin as you could possibly come without being a Bitcoin. So yes, 100 million Satoshi equals 1 Bitcoin.
Awesome. And then the second question is from Dennis. Steve, can you go over lot size, as I think that's relevant?
I'm sorry, could you say, I didn't hear something size.
Lot size, LOT.
Oh, yes, sure. Okay, so a lot is if you have many more than no, I'm kidding. A lot size, I'm guessing, is if someone has 10 Bitcoins, how many Ethereum is that worth? Or if you have, I'm sorry, Dennis, go ask the question.
I mean, basically, just for people on the call, you have what's called round lots and odd lots. There are certain minimum trading sizes, and if it's an odd lot, it can be 1. But there are by convention, there are certain amounts that are traded to actually put those quotes on the board. And, any exchange will, if you look right at the bottom somewhere in the size, it'll actually tell you what the lot size is of everything. So as we move and the cryptocurrencies start to mature, I think we'll start getting into lot sizes.
Okay, I follow your question, Dennis, and I guess this is, there would be no, in my opinion, there would be no exact answer, except yes, different exchanges have different minimum trades or lot sizes. For example, the smallest exchange that I've ever seen for a lot size is 1,000 Bitcoin Satoshis. So 0.00001 Bitcoin could be the minimum trade. That's 8 cents, or 888 80 cents, sorry. So that would be the minimum trade size there. On most of the smaller exchanges, it's 0.001 or 0.0001, which is either $8 or 80 cents. I mean, when you start having 80-cent intervals being representative of the bid ask in any asset, it's not very accurate. So to Dennis's point, when looking at a bid and or offer, and I've seen this trick many times, where someone is bidding for 1 Bitcoin, someone sells 0.99999 because the prices say too high. So you have 1 Satoshi, a non-tangible amount is still left on the bid showing. And the exchange may actually register that because it's not a new order. One couldn't input that as a starting order, but it would be warranted if, when collecting data to basically say what the minimum interval that CoinGenius wants to use for its pricing is. Like 0.01 Ethereum or $1.50 of Ethereum probably is not a very representative case of what the actual price is. We're taking a composite. If you take the 10 top exchanges and there's $500,000 of Ethereum and there's $1 bid at 180, but you'd have to go down to 170 to do 100,000, then I would tend to use that number as what the actual bid is versus just simply looking at the top line for the bid or the top shelf ask for the offer, because they can people are very good at making things look like they're not. I hope that kind of answers the question.
Thanks, Steve. So at this time, I'm going to open it up for questions from the audience. I am looking through some things, and I know we want to talk about weighted baskets, but maybe we can kind of shift the conversation to the Coin Genius product, specifically around indexes and strategies as to how we look at the market. I am trying to get this as like the baseline of the Coin Genius philosophies. So Tim and Thomas, if you guys would like to weigh in here, and Eric, I'm very excited to hear from you eventually as well. So this can be open market analysis as well as fundamental techniques that we're using to look at the market as well. Or feel free to just show off what you guys are doing. Okay, Tim, I'm going to pick on you here.
And I was actually talking, but I had my microphone muted. So I was a few seconds in before I realized that. So, Steve, I was wondering about ideas you had for identifying market regimes. We had looked. One of the things on the research agenda was studying regimes in Bitcoin dominance, for instance. Do you have any suggestions for how to go about that?
I do, and I guess last week, being the starting point of these Wednesday conversations, when I look at if I showed you a US dollar versus Bitcoin chart this year and a US dollar versus Litecoin or Ethereum or pretty much 90+% of most cryptocurrencies, and didn't label them BTC or LTC, and you saw one from 3,000 to 8,000, the other from whatever 200 to 100, you would say they're almost non-correlated. So instead of me guessing or people guessing, well, how high will Bitcoin dominance go, or like the Bitcoin fork family is, I guess, one measure that I use, where that's Bitcoin plus Bitcoin Cash plus Bitcoin Cash Satoshi Vision plus Bitcoin Diamond plus Bitcoin Gold, and those equal about 72%. Well, that's only one slice of the pie, and then the second piece of pie, those are still 72% of the remaining 28. So Bitcoin dominance is actually closer to 90, but that's really nothing new. So I thought that instead of guessing, basically just pulling up a correlation matrix with metals, FX, your major 5 pairs in FX, your major 5 in crypto, your major 4 in metals on one side, and above those having the cryptocurrencies, and doing literally an old school correlation matrix where Bitcoin to Bitcoin is going to be 1, Bitcoin to Litecoin is going to be 50%, Bitcoin to Ethereum is going to be 40%, where they're basically non-correlated. Like there's more correlations between Bitcoin and, I think it was brought up in this meeting, something that I had not really looked at, but looking at the yuan, looking at interest rates, i.e. LIBOR, looking at the pound, if one were to overlay the pound versus Bitcoin or the yuan versus Bitcoin or LIBOR versus Bitcoin, you'd see a lot of striking trends that are highly correlated more to the 80% or higher R squared number, Whereas looking at Litecoin versus Bitcoin, you over the year you get a number that's less than 50%. I mean, they're almost at some point a few weeks ago, they're negatively correlated. I know it sounds crazy, right? Oh, Bitcoin's up, so Litecoin must be down. Well, the chart and the historicals don't lie. So I would urge us as a product, Coin Genius, to draw up one of these correlation matrices with Bitcoin, Litecoin, Ripple, Ethereum, and Bitcoin Cash, gold, silver, platinum, palladium, uh, DAX, S&P, FTSE, Nikkei, and then have currency.
Steve, I'm gonna jump in because you're hitting almost every one of these. And Thomas, this is really your arena for the Coin Genius correlation strategy. So we are looking
Thomas
at
isn't on, just so you know.
because Thomas is
Oh
not
wait, no,
great.
Data Disciples.
Yes.
That's you, Thomas, isn't it? Is that who that is on the list?
That is,
Thomas has a
yes.
no day podium today.
Sorry, what was that?
Well, that's the key. I mean, the correlation matrix and just pulling and seeing what's correlated over 1 day, 7 days, 30, 60, 90, a year. That's the data and numbers that are really monetizable, so to speak, where
So Steve, one second here. Thomas, do you want to give a quick overview of the Coin Genius strategy of what kind of just really just getting everyone up to speed here of all the things we've discussed over the last few weeks?
Yeah, well, I'll comment on the correlation matrices real quickly. So one of the challenges with the correlation matrix is the time window that you're talking about. So, historically, if you were looking at like the last 6 years of Litecoin, Bitcoin, you might see one correlation and something very different if you look at the price movement from the last 30 days versus the last 90 or 180 days. So I think one of the challenges is that at various times, certain cryptocurrencies, their price movements are correlated, and other times they're decoupled or uncorrelated to certain degrees. And really, when it comes to trading, the real issue is that what you're really ultimately wanting to do is to anticipate price movements. So, what does that really mean to me if the price of Litecoin and the price of Bitcoin are 80 or 70% or 60% correlated? That just means about 60% of the time they're moving together in a direction. What I really need to know, though, is what's really useful is a time lag measure. So, I've heard people will often talk about your current state, your success is a time lagged measure of your habits. So the idea is that, if for the last 6 months I've been eating junk food, I'm going to have put on some weight and lost muscle mass. And the opposite could be true. So one morning you wake up and you see, the price of Litecoin and Bitcoin have both gone up or down. That does me very little good unless there's a time lagged indicator. So that's one of the things that we should be really interested in is that indicators that have some type of lag against the price movement, which is an art form all of in itself. And I think something else, correlation matrices are extremely, I think, valuable for many reasons. But the other thing that I'm really interested in is something more. Okay, so if two asset classes are 70% correlated, I'm really interested in what's going on during that 30% of the time they're uncorrelated. Why do they not move apart? Is it something to do with volume? Is it something to do with the news cycle that came out? On and on and on. And in one instance, I think I'm really interested in a time series model, like a linear model, where we're able to look and say, okay, if we're talking about like an R squared value, I'm wanting to know which combination of variables can have the highest predictive value of the price of Bitcoin and at what time lag. So, maybe if we have volume and we have sentiment, if we have Google search volume, and we have, let's say, like a 30-day moving average, and we lag the other indicators, maybe that will explain 90 or 95% of the variation in the price of Bitcoin's movement. I guess from my point of view, these are the that's the that's the holy grail. It's to try to understand what combination of variables, and then not only which combination, but how those combinations interact with one another. Ideally we would have this beautiful mathematical model where I can plug in a time lag of a lagged volume, maybe difficult Bitcoin network difficulty, the miner revenue, aggregated volume, sentiment, Google search volume, and that predict 98% of the variation in Bitcoin price movements. I think that's the long-term view. Of course, in correlation matrices, I think the value in a lot of these are, there's a lot of value, but I think one of the value is hinting at which indicators to be looking at. And really that kind of gives you the surface level, but pretty astute idea of or insight what's going on and how they're interacting with one another. And particularly, I'm really interested in asset classes that are negatively correlated over those that are positively correlated. I feel like
Thomas.
Yeah, please.
Can I? Okay, so basically, one of my skill sets is seeing when things break apart. I can't explain it. I've just done it for 20 years, and by track record. So if you can build a correlation matrix for 1, 5, 10, 20, 50, 100, and 200 days for, I don't know, I think it comes out to about 20 assets, and we can show what's strong over 200 and what gets weaker over 100, and then what's really strong over 5. You begin to see the turns in correlations where, I guess earlier this year when Bitcoin was at 3,500 and there was started to be talks of, rates might be going down, and you saw Eurodollar futures go straight up, rates coming down. The correlation, if I showed you the charts, you'd think they were almost the same thing. When did they break? Right before 4th of July. Do I know exactly why? No. Brexit was mentioned. The Litecoin halving thing, where Litecoin might have gotten a little overextended. But at that break, where I guess if you could see the chart from last week's, it would be useful, which I'm happy to send to you. Then just seeing what's working, and the first day that we're really wrong, that's fine. If we've been right for 90 out of 100 days, and then we're really wrong on the 101st day, it's like, okay, fine, we're wrong today. Let's figure out why, a la what you're saying. And those are the things that I'm good at. I can point to what the other breaks are in kind of exterior markets that people may not be looking at. And if you can build this out and I can see it, we essentially can kind of predict the future. Not to pat myself and ourselves on the back, but I'm dead serious. I can just do things. So,
well, hey, this is what we can do is, we can build a widget, essentially this thing that you can open. You can click a link to, it'll open up an HTML page, and you could say, I want these 5 assets. I want to see a matrix of these 5 or these 20 assets. And then it'll produce a matrix. And then they'll have a little slider where you could say, okay, I want to see the last, what the price correlation is over the last 5 days, 6 days, 7 days, 8 days, however many days worth of data is available. And it will update the visualization as you do it. That would be the most useful, probably. Or you could select time ranges, custom. So if you wanted to, that's something else that's useful is instead of saying, well, I want to know what the last 30 days are, if you wanted to know, okay, during this 2017 boom, what was the correlation like? And then during, so if you want to say like November 1st, 2017 through December 1st, 2017, on and on and on, that shouldn't be too difficult to build out.
Well, I can tell you just from my knowledge, from the month of 2017 going into the CME's first day of trading, altcoins and Bitcoin were inversely related, where you had Bitcoin going to 20,000, where money was flowing out of everything else, piling into Bitcoin. Then you had Bitcoin drop $10,000 in the 10 days, basically the last 10 days, or I'm sorry, it was early December of 2017. That's when the money started flowing to the altcoins. So we're actually at a juncture where when Bitcoin is highly correlated, it's like, oh, Bitcoin's up 2%, and you look, oh, Litecoin's up 2%, and Ethereum. Then we're basically just trading the NASDAQ. There's not, and there's a lot, there's guys that spend billions on R&D trying to predict that. That's a lot harder. This being a young market, when these correlations are so negative, i.e. Bitcoin dominance went from, I think, 65 in November of 17 to 33 in January of 18, that's when like all bets are off. And when we can see that and point people in the right direction, that's when people pay substantial amounts for our services. We're now guessing if, Litecoin is going to be up $1 and Bitcoin's going to be flat. I'm not that smart. It probably is going to be down $1 and up $1 tomorrow. But catching that major turn, seeing that something, that event, that's where having the data to back up what I see would be invaluable, in my opinion. I think that's what Christina kind of probably has wanted me to say for like a long time, where if I tell some of my theories, some people believe it, some people don't. I'm like, well, dude, here's my statement, here's my track record, so believe it. I tell people some of the stories, and they don't. They're unbelievable.
Yeah, well,
but
hey, Steve, well, this is what I would always tell somebody. I mean, I have anecdotes too, and I'm not saying I don't believe you. I mean, I want to believe you. But I think what most people, especially whenever it comes to money and whenever it comes to technical analysis, trading, statistics, what I hear a lot of people say, and what I often say is, in God I trust, but everybody else bring data. So if we don't have, proof or quantitative empirical evidence, it's hard to make a sell. I've seen a lot of tools or where they'll say, look at this, we've made 20 different technical indicators, and what we're going to do is go back to the historical data and say, well, how did they perform? So in just the basic of this, like here, there's only two things: did the price go up or down? Or third, did it stay the same? But it never stays the same. So let's look at Bollinger Bands and say for the last 20 days or last 100 days, if we were judging just based on the standard interpretation of how to use a Bollinger Band, did it say up or down, and was it correct? The same thing with just any other indicator in a rune, a moving average. The last time the moving average cross or channel commodity index, just any of these 100 technical indicators that you have, and I think that's what people generally want to see. With correlation matrices, here's the problem I have with them. I find them infinitely interesting. I find them valuable. It helps inform my trading decisions. It helps me understand the market, the regimes. But what it doesn't tell me is if I wake up today and I say, do I need to sell or buy my Bitcoin? How do I judge from a correlation matrix how to make that decision today?
Those are exactly the questions we need to be asking. And how
that's
can we?
Where part two would. I guess that's where, you break off from the correlation matrix, and that's the first day, you know, the trend is broken, where you see that big red candle turn, you know, the big green one turn red with the huge wick on top. It's like, okay, so Bitcoin was going down, down, down because people kept talking, oh, rates are going up, rates are going to 5, blah, 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 blah. Well, then the Fed came out in the winter and goes, oh, wow, we're actually going to have to lower rates. You see Euro dollars go up, you know, or rates drop 25 basis points in LIBOR, Bitcoin goes up $500, $600 that day. Then you have to add in, I guess, that human element, and that's where all of us can add that value to just the pure, you know, black box theory, where it's like, okay, the trend in Euro dollars worked, but it broke in July. And the why part, and seeing, okay, so you were long Bitcoin at 4,000, you were still long it at 13,000, you had to get out at 11,500, and like that was the big trade. And now it's kind of a game of the Fed is going to raise, they're not, LIBOR is going to do this, and all those crosses, where that's more of, I guess, the data-driven trade that I'm not really, that's where I need the assistance, so to speak. And right, I think that's where Coin Genius provides that. That's, Jeremy, you can go ahead.
No, sorry. No, I just want to make a few comments. Number one, Thomas, the question that you just asked is exactly the question that we should be asking, right? We should be asking, you know, regardless if it's a retail investor or a pro investor, you know, how can we derive insights from these correlation matrices or any of the other data points that we have, and how can we present it on the front end in such a way to where anybody could understand what we're saying? Because there's no site, in my opinion, that does that effectively yet. The second piece that's really important that everybody should be looking at it through this lens as well, what Thomas said, is, you know, the proof's in the pudding, right? We need empirical evidence that we can back up our claims in terms of, it's not even claims saying we can predict the future. It's just that we know what we're talking about and that we're a credible source of information, and people should pay attention to Coin Genius. That's all we should be promoting, right? It's things that we should be promoting on social media, things that we can put on the site, things that we can put into blog articles. All of those things are going to gain us the credibility that we need. So Steve, in conjunction with everything that Tim is putting together and Thomas is putting together and some of the other folks on the data science team, I would lean on you to say, okay, here's all of the data that we have access to. How can I start putting together hypotheses and use cases around this data, especially leading up to the conferences in 24 days from now, where we're at Money 2020 and then WCC. If I'm in front of investors and I can show them 3 or 4 examples of hypothesis that we've determined based on all the factors and all the, you know, data points that we're bringing to the system, and 3 out of those 4 hypotheses prove to be true, and I can show that in a time series fashion in some capacity, like sentiment as an example spiked, we anticipated 3 to 5 days after it would affect the price of Bitcoin. Like, that's one strong use case, and I've already seen people do that. So in the same vein of the correlation matrices, if we can start putting together stuff for the next 24 days, like I said, that I can use in these presentations, that's what's going to get somebody to believe that we know what the heck we're doing, and they're willing to put their money on the table to invest in our company to build this thing out.
I also, I mean, if you're looking for that thing, hi, it's Tim. You know, what we're looking for is cause, right? So, I mean, Keith was on the R&D call this past Friday, and he said we should be looking at the money coming out of Hong Kong to England, and the pound and the effect on the pound on Bitcoin. And there was a correlation there. And so I guess longer term, or even short term, if we can do it, but longer term, if we could have some sort of historian going back in time and looking at those things that affected it one way or the other due to an event like that or another event where we can specifically say, when this happens, this will happen. That's the cause that helps the hypothesis that gives us the prediction.
Yeah, I would agree. And to take that a step further, just for some of the new folks on the team, you guys may or may not know about really what's the holy grail for us as an organization. The holy grail that we've been talking about, Eric, you've been on many calls with this, with with Rom, etc. It's It's the early identification of black swan activities. That, like, those black swan events, if we can have some sort of early identification, even if it's a day in advance, a few days in advance, and at least we're right 80, 90% of the time, then that is what people will pay us for. And that's how we'll become a $100 million plus company. Like, end of story. I've talked to many, many hedge funds, institutions. They're all looking for something. And if we can give them any edge, they will pay big bucks for it. Ram has a lot of incredible thoughts. We just talked about it the other day in terms of an approach. Eric and I work together. Eric worked tirelessly on an event trigger dictionary and just pulling all the different events that have led to volatility, I think in excess of 5% Bitcoin over the years. So that's eventually what we're trying to build. Somebody has a mobile phone in their hand and they get a push notification saying, hey, an event just happened. This has happened before. It's been verified by X amount of sources. We've already seen an uptick in volume. Sentiment has already shifted and people are trading. You might want to check it out. Like, that's ultimately what we're trying to provide. Now, how to get there is a different story, but now you guys understand ultimately what we need.
Jeremy?
Yes, sir.
Okay, I just took a picture of a chart. I know I can send it to everyone later, but I just want to show, I'm not even sure how to show a picture on Google Meets. Like, I just took the picture and it's on my phone of a chart. How can I show it to everyone? Or can I just send it to one of you guys? Yes.
Can you send it via Slack or something like that? And then somebody can share their screen, or send it via text message and somebody can import it to Slack, whoever's on their desktop.
Yeah, I have Slack here.
Steve, if you Slack me, Tim, I can probably share it in chat or maybe share my screen, perhaps. I'm on the desktop version.
Okay. Here. Okay, I'm sending it to you right now in Slack, Carl. If you can show that to everyone, I guess this is kind of what this would sum up kind of my theories in a nutshell. So that's Bitcoin, and that's March 2020 Euro dollars. So as you can see from the bottom, they were both pretty flat. Then Euro dollars started to take off and Bitcoin followed. So whether I'm not saying this gets you, this isn't going, buying the absolute low tick and selling the absolute high tick, it's pretty close to impossible. But if someone were able to get long or, add to their portfolio at 3,800, 4,200, 4,500, even 5,000, you see on that chart where it worked until July. In July, things started to kind of just bounce around and bang around, and then they become negatively correlated now. So I'd have to look, and I guess that's where someone like Thomas could probably, and having the actual data could help. But as you can see, when Bitcoin has now been heading south, where Euro dollars are continuing higher or really not moving, i.e. rates aren't going lower or higher because they're waiting for the Fed. So what's that next event? Why is it still going down? And I would commend Keith on pointing out Euro dollars are LIBOR, and LIBOR is London's rate. So you have people still putting money into low interest London assets and out of Bitcoin. Now, there are theories on why. Not going to get into that. But here's something where using a correlation that worked. Okay, so you got into Bitcoin at 5,000, you got out at 11,000. So you have nothing on, you're watching bang around. Okay, well, Euro dollars aren't moving, but Bitcoin's going down. Now, what was that driver? Why? That's where I would kind of pass the ball off to someone with more of a sentiment-based strategy. And it's like, oh, wow, this Bitcoin aficionado sold $1 billion, or this happened, they made it illegal in this country. And then we kind of keep passing around where if my theory is working, then we'll go with Steve's theory. And once that trend breaks, then there had to be an event and someone with more of a skill to, I guess, sift through all the social media and all the influencers or wallets. That's where we would pick up on the next trend, and basically, instead of being long Bitcoin, then you're either flat or short. And then we follow that trend. So I guess that's what I'm trying to get at.
I see sort of things like the correlation matrices as visualizations and tools. To Thomas's point, there could be historical back-tested models. Additionally, there could be like commentary and analysis. I think that there's a suite of both data and interpretations and alerts and things like that comprise the Coin Genius offering, and in my mind, and sort of running with the things that Jeremy has been talking about.
Let me ask all of you guys a question on the phone, right? And this is just being like just real talk. We already know that all the hedge funds out there in the space, especially the ones that are in capital markets, they have 25 plus PhDs on staff that are all working on these problems, trying to identify the early onset of black swans and finding all these correlations and all this stuff. To your point, obviously the stock markets have been around for a hell of a lot longer than crypto. So we're so new. People are now coming into the space, and all those PhDs are either starting to come in or they're here, right? So how can a little company like us differentiate ourselves? Yes, one is visual, right? So the UI UX, which is where I think we're going to set ourselves apart. Yeah. But secondarily to all that, it's really about just thinking about our approach in a different way than they're thinking about, right? So we have to get really creative to figure out how we can really add value, not only to them, but to the retail investors. And if we position this for retail and we get a tremendous amount of viewers and people that are utilizing our service, it's just a matter of time before one of the bigger hedge funds go want to gobble us up, buy the company, because they don't want to share it with anybody else anymore, right? So I'm just asking everybody, from their thoughts and their perspective, do you agree with that statement? And I do think there's a small time frame in which we can really just dive in and add this type of value to where we create that opportunity for the situation I just described. But how can we think about this in a different way where we can add a tremendous amount of value and really look at this in a different way than anybody's exposed this in the crypto space?
I think from a basic standpoint is basically what we're doing now, right? I mean, I love the idea of like where Thomas is going and what we want to do eventually of giving, clean predictions and everything. I think that's all good and fine. But to Steve's point, there's a lot of huge institutional investors that just want data. And if we can start there, to Steve's point, if we can give correlation matrices and we can do all these kind of things, they can then interpret that data how they want and they can dominate with that data. And I think there's a marriage for all of it, right? And yeah, the holy grail at the end is, as you said, and I totally agree with what Thomas is saying. But at the same time, we have people like Steve's in the world that just need some historical data presented nicely. And they go, oh, sentiment changed. Okay, that'll give me a 10% influence change on my decision to trade today. I'm actually not going to pick up a short, which I wanted to do because, XYZ. So I think for an immediate solution, I think we're doing things right. And for that, if tomorrow we could have predictive models, that would be amazing, obviously. But yeah, my thought is that I agree with all of it, and I think it's all a time release thing, and I think everyone can benefit from anything. But that's just too broad to really nail anything down. But yeah,
Jeremy?
Yes, sir.
I'll give you an example where there was a small event. Well, I'm sure most of us know the original Brexit vote. So there was a lot of volatility pumped in, like the VIX had gone from 10 to 20 and blah blah blah. But the night before, when I started getting calls from various clearing companies that people were going to need to put up 3x margin on the British pound, 4x margin on the euro, 5 times margin for gold, 3 times margin for S&P. That was that event for me where it's like, oh shit, not all, but a great deal, a ton of clearing corporations that night, they didn't announce it to everyone. It's like if you had an account, they told you, but you needed to put up 3 to 4 to 5 times more margin just for that day, kind of out of the blue. And lo and behold, what happened? I think at one point the Dow was down 1,800, gold was up 200, blah, blah, blah. And another one where the last time before that there was a massive margin change on a macro level was the presidential election where Mr. Trump was elected. And what happened when he was elected, I think the Dow was down 1,200 at one point, and then it was up 1,000 later on. And those would be, having a trend trade going into that, basically telling people sometimes not losing is a lot better than making, where if you have people in the right trend and then we see, oh, there's a big Brexit vote, it's probably a good time to take profits. Or if you're close to a scratch or a small loss and don't want to have a lot of risk, then take off your positions now. And those are the kind of things I think are worth tremendous amounts of money.
Agreed.
But now you're acting as a financial advisor, right, Steve?
Yeah,
well,
I mean,
Take
exactly.
that approach.
Here, let me. I'll rephrase that. I would be worded something like, we believe that the SEC vote on Bitcoin ETFs could cause a tremendous amount of volatility. And that would be the end point. People can interpret that the way they want. If people like trading volatility, then obviously pile it on, because you're either going to get a margin call and you got blown out, or you're going to be up 50%. So I guess without saying, telling people what to do, because like you said, you need to be a financial advisor to do that, but saying this event, we believe this event, or that Bitcoin dominance has reached such an extreme that using your long Bitcoin to enter Ethereum or ABC coin or blah, 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 that might, it's reached this. I know what you're saying. You can't tell people exactly what, but
Well, not just that, but now you're kind of straying away from predictive analytics, right? And you're presenting the fact as, say, like this regulatory, like this announcement is going to be made. It could have this effect or it could have this effect. It would be best if you just do this. You're not really. It's not like you're not providing that edge of, okay, X is happening.
no, I follow you. So I'm trying to think of a rewording.
Well, I'll jump in. The bottom
Yep.
line is, as always, we're not giving trading advice. We are simply discussing our observations of the market. So, Jeremy, I know you're a heartbeat away from jumping into. Let's do some final thoughts and wrap up from here. This has been an excellent conversation. This is exactly why we want to do this every week, and I love these conversations. So. Thomas, I think you're about to say something, and we'll do a quick roundtable for any final questions, and then we'll wrap up from there.
I mean, I guess what I envision, I haven't talked to you guys too much about what the end goal is, but what I think as far as the website, where the value comes from is a couple of different things. A lot of the value comes from generating enormous amounts of website traffic, and not just traffic in high volume, but people who are going to stay on the site, interact with the site, who are going to live on the site and return to it frequently. And I think there's something to said about possibly about content production. So then from there, you can sponsor, you can have sponsorships, you can have ads. Same thing with a video content. And I think what ultimately what people are going to want from our website is not only to come to it and say, yes, I should sell or buy my cryptocurrency, but they're going to come to it, one, because of the experience, the friendly UI, and they want to come to it because a lot of data is distilled and synthesized, and it's better than other data, and it's visualized better, and there's even some analysis with it, better than what you get from CCN or these other website journalists. But also, I think they're going to want to come to it because they're going to want to learn. It's, in a way, I envision us teaching people how to use all these technical indicators, how to use X, Y, and Z. They're going to want to come to learn about the history of cryptocurrency, the culture of cryptocurrency, what these metrics mean, how to use data better. So in some ways, I see this being like Investopedia in a way that where we're adding the same value as we're doing that, where we're saying, so this is this indicator, this is what it typically did, this is what's going on with the charts right now, on and on and on. Eventually, maybe people will want to have a subscription, or they'll want to purchase special access to X, Y, and Z. Institutional investors, though, in all honesty, are not going to purchase a correlation matrix. The point has been made that many of these people have 25 PhDs and quants on staff. It doesn't take much coding to produce them. It doesn't take much data to produce them. I think they're essential, but really, I think people are looking for the whole shebang. And CoinGenius is looking brilliant. I've been trading cryptocurrency and have been involved in cryptocurrency since early January of 2013. I bought my first one at $90.50. I was on BTCE in 2013, but years before it was taken down by the FBI. I remember sitting there for 7, 8, 9, 10 hours reading through the scrolling troll box. So I'm really, I haven't involved in culture. I remember the spiritual reading the Satoshi white paper.
You're breaking up.
Sorry, Thomas. Thomas. Yeah, Thomas. I don't know if you probably can't hear us. Your reception was really bad, so we lost that last 30 seconds or so.
Hey, everyone.
That's too bad, because he was definitely going into something big there.
Yeah.
Well, can I add something real quick? I agree with Thomas 100%, and that is, I guess, one kind of extreme of the spectrum where you're talking to funds or family offices that are $1 billion, $10 billion, where they're playing big. They really want to pay for that. Now, going to the masses, going to the total other end of the spectrum, I think there's some things where Christina and, working with Christina and Jeremy, I had to learn some basic things like what Google Meets is. I know it sounds goofy, like, oh, really? You didn't? I can say honestly, I didn't know. I couldn't access it. And that might seem, oh my gosh, I can't believe he said that. But on the other end, what about just some of the most basic things, like explaining to people how to calculate a spread, or, hey, these are top 10 exchanges, here's why. Like, I think that if you want content, that seems to get overlooked by a lot of many people, where we can start with content to draw people in on the most basic level, like explaining what is a cryptocurrency, what is why is, what I'm saying, like just the most basic stuff.
Yeah. So because it's being recorded, I can't say too much, but we're actually working on a partnership for that before the end of the year. So all of that is coming, and Carl will talk about that offline. But yes, to your point, these data points can be broken down to, just let's teach everyone the fundamentals and then evolve from there.
So guys, I think, part of everything that we've done since the onset has always had that educational flair to it. We've always wanted, a section that's just education about the basics. You know, we thought about partnerships, we thought about doing it ourselves, but I mean, Steve, I think there's probably a lot. I mean, if you have time and you want to just start jotting some of this stuff down, I think this is a really good place to start, rather than just relying or waiting on a partnership to kind of come to fruition. Because to your point, those are things that we could just start piecemealing out on social media. We could just start being that educational resource for a lot of people. And I think that kind of works in conjunction with exactly what you and Thomas were saying, that people just want information. And a lot of times people are scared to ask, even on social media, a question because they don't want to be, you know, in a position where they look silly. So if they can come to us in just like a closed fashion to where they can actually just research whatever makes sense to them all in one place, and we can guide them through the process of learning about crypto, how to set up a wallet, like all those things, and eventually get, you know, powerful enough to be able to actually want to utilize data because we're teaching them how, and there's a forum for which we can do so, then yeah, that's how you build a community. And that's why if I had to lay out our direct competitors now comparatively to when we started, especially because we're going to have a wallet solution and trade execution with our new partnership, it's going to be TradingView and eToro. Like those are the two I want to go directly after because they've created these incredible social communities where people have incentive to share because they're helping one another. So I think that's right in line with that.
We do have an index that Carl and to some extent I have put together with terms that we can surface already. So that can be part of that educational part where they look up the basics.
Yeah, and
Awesome.
Steve, Carl and I would love to help you with that data and potentially even source some of that. So if you have a list of all the things that you'd like to share, you know, put your Professor Steve hat on. I would love to help you build that out.
Sure, man. I tried. There have been a couple projects which I've helped and even given them some content over the years. And as much as people love hearing about, well, oh, you know, Bitcoin was down, you know, 1,000 last week, or ABC was up 20%. It's like, great. They can pretty much look at any website to see what happened, but it's getting that first person. Like, I'll tell you guys a brief story. Sorry, and then no one wants to. The first time someone tried to get me in cryptocurrency, I went to Coinbase, set up all my stuff. You know, I almost didn't get involved because I put my debit card down and it would let me buy $18 of Litecoin, and there was a $3 buying fee. I thought, wow, this is just a scam. So here I am years later talking to some of the brightest minds in this industry about me. I think a lot of us sometimes, you know, do take for granted that to get people in, they have to know what to do. Like, you know, hey, go to Coinbase. And I know you can't say that, but it's like, go to Coinbase, sign up, link your ATM card, set up an account at ABC Exchange, log in, you know, send your Bitcoin from Coinbase to there, pull up the pair. It seems rudimentary for all of us, but I'm sure there's quite a few people where the 10 steps that it takes to actually buy something, you know, that's not Bitcoin or that's not on Coinbase, there's like those secondary steps. And that's the problem that a lot of, I guess, projects not in the top 20 experience. It's like, oh, wow, you got to go to Coinbase, then I got to send it to this exchange, then I got to download a wallet. And it's like, you lost them. Where if someone were to explain that, I think that would by itself would decrease Bitcoin dominance. If there were a large enough audience of interested people that wanted to put $20 or $50 or 20,000 or $1 million, whatever it is, it doesn't matter, because some of the people that start small, I can tell you I don't trade $18 lots anymore. But the first time I was involved, that was the maximum I could put in for a day. So, you know, things change where sometimes the littlest fish might not be so little, but they just get frustrated doing it.
I hear you. And I know that we've gone over, guys, if you have to drop, that's awesome, but we're going to stay on. Jeremy, I think it's really interesting to talk about the wallet solution that we have coming around the corner, if you'd like to get into that and, you know, for strategy and just for transparency.
Christina, I had one quick comment on.
Yep. Are you talking to me, Christina? Sorry, cut out. I couldn't hear you.
I was, but I was sorry. Tim has a quick question, and then I'll pivot back. So, Tim, go ahead.
Just on the question of what can we do to get the hedge funds, I think having some sort of like a dumb money index, like an index of small orders or of retail or something like that, something that the institutions could see how small investors are positioned, would be an interesting data set for them. You know, because they're looking for edge and people that are maybe trading on fear and greed or something like that more explicitly. So that might be an idea.
Tim, you have the answer. I think you are the one that suggested it. I would agree. It was something about the inverse of, I know this sounds good, but the inverse of BitMEX, Bitcoin open interest. The higher it goes, the closer you are to a top. I mean, in this market, the lower it went. Was that you or is that someone else? I don't recall, but you're right. I mean,
I did look up the API, but I haven't gotten access to it yet.
That's basically that's it in a nutshell. Or whatever future, I guess. I'm wondering if there were Litecoin futures, what the spec position was when it was 140. It was probably massively long. And now it's probably gotten, I don't know, I'd have to see the numbers, but I'm guessing it's gotten massively short now. But there's really no way to measure it, where if there is a measure on BitMEX futures open interest or CME or anything else, I think that's one of the quote unquote smart and dumb money indexes. At least I found that in other asset classes and futures when, you know, we went from 4 to 16, how the open interest, people couldn't buy enough at 16, and lo and behold, a week later it was $8. But something along those lines.
Cool, Steve. Yeah.
Awesome. Tim, if you want to go into the fear and greed index and that strategy, I'm okay if we explore that. Me understanding those data points and Tim understanding those data points is helpful as we're talking with both investors and with potential, customers.
Sure. So I need to write some better documentation for this, but right now, it is a momentum measure that looks at, it takes, let me get my notes on this. Okay, so it's a momentum measure that looks at the one that I ended up using, or that I'm currently using, looks at the top 15 index, so the CoinGenius top 15. And from that index, it calculates the difference between the index price today and its 100-day moving average. And then it normalizes that over the past 2 years. So you end up getting a number that's centered between like 0 and 1 or 0 and 100. And the higher the number, the more momentum that there is. Another component, and this is an interesting one that we'll have to test, but in equities, people say that a sound market is one in which there is broad participation. And the breadth measure looks at each of the 15 constituents of the top 15, and it takes the difference. It determines if they're at a 100-day high or a 100-day low, and it takes the sum of the 100-day highs minus the sum of the 100-day lows, and that difference is the breadth, So there might be, on any given day, there might be like 5 stocks or 5 coins making 100-day highs and 3 coins making 100-day lows. So that the number of that day would be 2. And it looks at that number also on a 2-year look back basis. The next one is volume. If the coin, so for all of the top 15 constituents, it looks at, it assigns all volume as up volume if the price of the coin goes up that day, and it calls it down volume if that coin declines that day, and performs the same 2-year look back operation. One that I wanted to include but didn't for this first iteration was actually that BitMEX, or let's see, I looked at it, open interest on puts and calls for Bitcoin and Ether at Deribit, but there are some different things that I wanted to examine. I skipped that for this time. I also was going to look at real interest rates, with the idea being that higher real interest rates would disincentivize you from owning a cryptocurrency that doesn't pay an interest rate. And then volatility is one that's inversely, so more volatility is usually associated with things declining. So I took 1 minus the volatility measure, and normalized that over the 2-year period. And this
that
one,
is true 100%, Tim. The VIX thing, if you see the VIX go from 15 to 30, like crypto doesn't want the Dow down 2,000. You best not be long crypto because it's not going to be up. Like, I will put that out there, but sorry, go ahead.
Sure. And the final one is something called safe haven demand, which looks at the difference between the 20-day percentage change in Bitcoin and the 20-day percentage change in the index as a whole. With the idea being, and Steve and his comments tonight alluded to times when Bitcoin and the index maybe really diverged, but the idea was that when people were seeking safety, they would flee to Bitcoin, the kind of known entity.
I think they do to an extent, Tim. Oh, sorry, man.
Yeah, no problem.
But
okay, so that was the idea.
Volatility, no, volatility, like, you know, if the Dow's down 500, you know, if it's down whatever 3%, yes, you might see out of Litecoin into Bitcoin, but on what I'll call like a route where you start to see, you know, you see metals turn down, where all of a sudden the Dow's down 1,000 and gold was up 50 and now it's unchanged. Those are the days where, through my experiences in 2008, 99, you know, 1999, 2001, when it gets really bad, people just hit the, you know, get flat button. And, you know, depending on the trajectory, I would say there's probably, you know, at 8,000, I don't know what the spec long and spec short is, but if Bitcoin was 20,000 and you had the Dow down 2,000, I would not want to be long at that day. But sorry, you go ahead, man. I'm agreeing with everything you said.
Awesome. And at this point in time, it actually just equally weights all of those different measures, and the average of all of them is the fear and greed index for that day. So I will write up some documentation about how that looks, and we can, and future iterations, we can do, you know, some more testing and validation to prove out the concepts, and maybe add new ones, and add that open interest on the puts and calls, or the futures contracts, or things of that nature.
Yeah, open interest is definitely a huge one. Well, I see that Thomas dropped off, so all of my other questions are kind of around the volatility index visualization that he's looking at, and we kind of hammered out correlations. Carl, I'm really interested to hear from you and Tim I'm really interested to hear from you. So actually, Tim Vogert, from a Coin Genius perspective, do you have any questions around any of the things that you've heard today, any of the products that we're building? We're kind of saturating you with what's happening in the technology world here.
Yeah, well, that's why I'm on the call. Tim, I have a question for you. So, Crypto Slate and Alternative Me both have fear and greed index scores, and they're using an aggregation of volatility, volume. I'm just reading the social media surveys, Bitcoin dominance. There's a score that represents extreme fear at 0 and 100. Extreme greed is the other. I guess my question is, what are we doing that is going to make ours better than theirs? What's going to separate us in the fear and greed index category? Alternative Me has gotten quite a few write-ups that people, including CNN, have done articles on. Blitzstart has done articles on, and I'm just concerned. I think we should have it. I absolutely agree with it. But what makes ours better and different?
I'm not sure. I'd have to. I have seen the Alternative Me index, and I'm not sure what they've done in terms of validation. In this early version, we've been trying to come up with ideas that make sense intuitively, and to collect the data sources and make a rough and ready number. In the future, I think that we have, I guess, a wealth of trading and machine learning and statistical experience on staff here, and I think it's going to be worthwhile to do, and that's that second phase of the project where we really look at the validation.
Right. Okay.
Yeah, I think Dennis left the conversation, but that kind of goes back to what Dennis was saying in the chat, which is, the proof in the pudding, because everybody's going to say, if you know so much about the industry, why don't you trade on it yourself? And that's why he was saying that. And I think Tim might have alluded to this a little bit earlier as well. Is there an opportunity for us to put a small portfolio together to say, well, here's this in action if you utilized it in this way.
Right.
Right. But then again, if the results come back so favorable, the first question that I would ask myself, even, and other people would ask us too, and they have in the past, why don't you just become your own hedge fund? Right. So that's
well,
a battle we
the real question is, why would you ever share it? And the whole point is, it's the number one question we get. Why would you ever share it? Why wouldn't you just keep it for yourself and become a hedge fund? And the answer that we always give is, we are a data and analytics company. We are creating these to share this with the world, to help create mass adoption for these markets. And we believe this is just the tip of the iceberg, that this is the very beginning of tokenized, commodities and things that is an entirely different asset class than has ever existed before. We here at Coin Genius, we're here in the trenches on the front lines of this industry as it's evolving. And we are just using the data to the best of our ability to be able to create deeper insights and derive meaning from it.
Right. And level the playing field for the everyday guy so that he has an equal chance or a better chance in trading, where the quants and the big firms always have the best data. We're providing that for everybody who's not a big guy. And Tim, I think what we could consider here is taking a look at all of the matrix that Crypto Slate and the other one are using, and then say, okay, we're probably going to use those because it makes sense. We could eliminate those that don't, but what is a matrix that is special to us that'll make us different? Like I said, having it's the important part. Separating ourselves with it would be great, but maybe we could assign something to interns to take a look at what we could add to it that would make it better and separate us from the pack on that one. That's just
I totally see the competition analysis there.
Yep.
We can totally make that happen.
Yep.
Steve, really quick, I'd like to pivot back to Dennis's chats here of saying the proof is in the pudding. A few months ago, we started trying, right? We were trying to take your strategy and mimic it. Carl and I were trying. But if we were to automate something, can you tell us a bit about your strategy that you were trying to teach Carl and I? If we got everyone involved and we set up this automation Jeremy has this trading solution right around the corner. Sorry, you're breaking up. I'll stop. Go ahead, Jeremy.
That must have been a delay. I spoke maybe like 30 seconds ago and it finally caught up because of my reception. So just continue now. It's fine.
Oh, I was okay.
wow.
Are you good with? I thought you were stopping me from going down this path of questioning where you're like, no.
No. I literally said it 30 seconds ago and there was a massive delay apparently.
Got it. Got it. Yeah, no, we didn't hear you. So it sounds like we're on the same page. Steve, if you would like to give the overview, and if we were to turn this over to CoinGenius team of saying, okay, how would we automate this? How would we execute it? How would we have the levers and the knobs and dials that need to happen at the moment that it needs to happen, right? That's all of my dreams are coming true, Steve. So tell me what's in your brain. How would you go about with a trading strategy if we were going to start it tomorrow?
Well, that's not like putting me on the spot or anything, but
not at all. Yeah, no, totally.
That should be a prepared question.
Well, okay, fair enough. We can delay that, but that's where I'm going with this one.
Yes, I couldn't, Christina, I couldn't begin to like answer that on, just kind of winging it, where there's so many moving pieces that I look at. Like it could be the conversation that we had.
Can you give me the list of those moving pieces? If we can have the list of the moving pieces, then I can have the team working on how we figure out how to activate those.
So, Christina, maybe I can help here, and Steve, correct me if I'm wrong. I think it makes sense to focus all of our energy and efforts in building out the page that we're setting out to build, because what I think is going to ultimately happen is once we actually have this in place, if we can execute on the vision, the information we all agree on this phone call is valuable to everybody in the industry, because we're the ones creating the data, or a lot of it. We know how to use it better than anybody. So I think once we have that as a baseline, then we can really start to dive into different trading strategies. We're going to have good trade execution. We're going to have a lot of different things that we can look at to actually formulate a sound strategy. And like I said, we'll have an edge because we're the creators of a lot of it. Is that a fair assumption to make, Steve, in terms of the approach?
Well, there you just said it, where when we, us, or whomever is the creator of something, I mean, it makes it that much easier. Just like working on a project where you're representing the founders and they're the largest stakeholder, it makes a trading decision far easier versus if you want to trade Bitcoin with $1 million, dude, you can get eaten up, going leveraged. You can get eaten up in 20 minutes, where $1 million, it really depends on its, I guess, product and strategy driven, where if we start creating indexes and pointing people that, hey, this index is, tokenized down the road and it's an option for investment instead of Bitcoin, so one is getting complete exposure, then that's like that to me is kind of one of the ultimate goals, where we create an index and it becomes a trading metric that people use, and then it's like, okay, well, everyone's comfortable with it, let's change it up. But what do I look at on a daily basis? I mean, I look at metals. I listen to what the people at CoinGenius said. I listen to the people on Reuters. I listen to various discourse and just see and look at, where certain players are. But it really depends on, trading Litecoin versus Bitcoin. That's purely a technical, there's an in price, there's a stop, and there's an out price, versus on a smaller asset, it's far more aggressive. If you're trading, if you want to get 10% of a project that's $200,000, that's easy, but you can't just sweep the book. Where if you want to get $200,000 of Bitcoin, I mean, I can just go to Coinbase. You know what I mean? So that's why I don't know if I can answer that question exactly where
Okay,
it
I
would
feel like
be
I've gotten a
dependent
lot of
on.
answers.
I'm wondering if you were talking earlier about fair price and how you can establish that. You were telling us about the mathematics, but you were also indicating fair price between the different exchanges. And with our partnership with CoinRoutes and their best price strategy, would it be possible for us to ingest their API and therefore have the exchange data from the different exchanges? And we could, for instance, put the top 5 or 10 exchanges and what Bitcoin is at that moment, and show it and show the prices between those exchanges. And do it for like the top 10 coins or something like that. So someone will look at our site and say, "Oh my God, look at the difference between Kraken, between Coinbase, between Binance," and they could see it on our site, and then they'd be like, "Okay, well, what's the fair price?" They'd have a whole lot better idea than just us showing a price. They don't know where it's coming from. They don't know what exchange it's on. And then us sending it to the mystery place over at CoinRoutes for best price execution. Did you get what I'm at?
Yes, I totally understand. And a dollar for someone trading, someone market making or looking to take a position in Ethereum of, a 10,000 lot, a dollar or 50 cents or $2 becomes a huge thing. On the flip side, for I guess, novice investor who is just looking to buy, $20 of Ethereum, then it's lesser important. I'm just trying to pull something up on CoinMarketCap to kind of illustrate where I'm looking at Ethereum Classic, but you guys don't even need to really. It's just I'm looking at the US dollar weighted price on CoinMarketCap, and it's 466, 467, and 468 on the top 41 exchanges. The first one where I get any really price differential is the number 42 exchange called EX Rates. And I'll go where my belief is that a lot of the edge in trading is a pair. Like, is Bitcoin expensive or inexpensive? Well, versus what? Because if I'm just doing it versus US dollars, it becomes a harder trade where I'm trying to pull something up on, I guess, Litecoin and see if there's, but you kind of have to go a little bit outside the top 20 for like real true edges, because competing in like the arbitrage markets, well, here, actually, I'm pulling up Litecoin. I don't know if people are in front of CMC, but I see 56, 5640, 5620, 5650. And then I go down to number 14, BIBOX, 5850. Well, if people are long and they're looking to exit, then I would definitely steer them to that exchange, or at least point out that, hey, this is trading 7% higher than the other exchange. I'm not familiar with that exchange personally,
Steve,
but
where are you at? I can share my screen.
if you go to CoinMarketCap, Litecoin.
Okay, so we're talking about something we could present to people that would be best pair, for instance. But still, through our
Yes.
partner with CoinRoutes, they're offering best price scenario. But best pair would be a great thing for people to look at. Best pair, best pair. I mean, that's something that I could understand. I could look at it and say, okay, best pair. That's Litecoin versus Doge or whatever it is.
Well,
that's something that's digestible.
It's not even that. It's also like fiat based, right? So like
Right.
what type of trading pair? Because a lot of times if you're I mean, I know for a fact that there's macro investors and they look for, trading pairs that make the most sense, because sometimes the peso versus the BTC or whatever it is, right? Whatever
Right.
they have access to in these obscure exchanges that maybe normal people don't have access to,
Right.
they're looking to trade that arbitrage all day long. What I think might be something good based on this conversation outside of the trading pairs there is if you look at the correlation matrices that we're thinking about putting together, and I know Thomas is leading the charge there, and you think of our methodology for how we're going to present that on the front end, right? It's going to be every single day. It's going to represent and show the highest correlation that exists between all those asset classes, right? And then you can look back historically and see what's happened over the last week, the last month, the last year, and what had the tightest correlations of all the different asset classes. In that same vein, it might be really interesting on a given day to show, and obviously we'd limit this maybe the top 25 assets, right? Top 25 cryptocurrencies, and show the biggest arbitrage opportunities that exist. And then we basically cap the exchanges where we think they become less credible, right? And then once they're all credible, we show the exact arbitrage opportunities that exist on a given day on a particular asset. Like, to me, that would be really interesting, because then you just did all the heavy lifting for me and you put it at the top of the site and said, well, if you want to get the best opportunity, you buy here, you sell here.
Jeremy and Tim,
it goes along the lines of the aggregate level and the roll-up information I'm looking for on this top page.
Right.
Yeah.
I think I can sum up or give, I don't know, this is kind of what's in Steve's brain, where I don't know how clearly it comes out, but so let's say you had $8,200 and you bought Bitcoin today. You bought one Bitcoin. Tomorrow it's down $300, but you see Litecoin is down $5. So therein lies the example of, is the person interested in the pair? Like, because they'll see the Litecoin Bitcoin pairs down significantly. So that there presents an opportunity for them. Whereas if the cash price is simply lower, then that might be a totally different exchange. Like, I know it sounds goofy like that, but almost it just depends the trajectory of which the investor is coming from. Like, is this someone who wants to allocate $8,400 of cash to Coinbase, or is this somebody that has one Bitcoin in the market and is looking for an opportunity in, you know, A coin, B coin, Z coin, Litecoin, Bitcoin Cash, whatever, and presenting both the best cash price and the best spread price, as we learn from exchange rates 101, that those can definitely differ. I mean, I could show you examples where, you know, the cash prices are basically the same, but Ethereum Classic in Bitcoin terms is trading 10% higher than every other exchange. Like, I look for those trades, obviously, but I'll have to explain it a little bit further.
You guys will be really excited when you see some of the stuff that Nick Kearney, the designer, and I are working on in terms of future iterations of the site and creating a really customized experience for each individual user. Because what we realize is that not only is everybody at a different state in terms of their sophistication around trading and level of understanding of the crypto markets, so you want to custom cater their experience to something that makes sense for them. But each one of those people, like Steve, on a given day, you might just be in research mode. Another day, you might be in the mode to where you just look and execute trades because you're seeing high volatility, et cetera. And in those different states, you need different types of information. So that is kind of the future state of what we're working towards, is that customization based on what you're looking for at any given time, and then refining those results to provide you exactly what you would need to get to that answer quicker. So just throwing it out there, it's pretty exciting. And that has nothing to do with the screens that are being shown right now. Just, this is like future stuff that's kind of on the drawing board, but it's really exciting stuff as it relates to, like I said, creating a unique experience that you're not going to find anywhere else. You know, you talk about all those other sites, like Tim, you talk about CryptoSlate all the time. You talk about Masari. At the end of the day, the reason that we are different, and this is what we should be saying to everybody that we meet at any conference or any investor, which is people don't want access to everything. They only want access to the things that they care about at any given time. And that's what CoinGenius is going to provide. And on top of that, we have a team of data scientists and mathematicians that are crunching the numbers to make that even easier. So you don't have to dig at all and you can just understand what's happening in real time.
Cool.
And that's literally our goal.
Let me ask you a question about the color scheme. Is somebody going to be able to toggle it bright or dark?
Eventually, Tim. We're going to start with dark mode.
All right.
But yes, we are definitely on that. We understand that people will want the light version but we're going to just do the opposite of what's normal and
All
start
right,
with dark
gotcha.
mode.
Cool.
Yep.
Dark and mysterious. I love it.
Absolutely.
I don't know that Tim had seen that, so I know that's not exactly what you were talking about, but just wanted Tim to get a sneak peek of some of the cool stuff that's right around the corner.
Yep. Yeah, there's a lot of screens that are out there that Nick's working on.
Awesome.
I'm all for
Jeremy,
the end of the month, that's for sure.
Hey, Christina, I have to run, actually. Everyone.
I was just going to say we've gone way over and this has been a great conversation, but if there's nothing else, I think we should wrap up and let everybody go.
Okay.
All right, guys. Awesome stuff.
Great conversation today, guys. Thanks so much.
Okay, bye,
Thank you.
everyone.
Hey, Tim Hesselsweet, if you want to hang on for just a second.
Both
everybody
Tims
else can go off.
Yep.
You guys can either stay or you can go. It's up to you guys. But
Probably both Tims.
Thank you, guys.
Should I stay?
Yeah,
Should
thanks.
I
And
go
Carl,
now?
thanks, Steve. Thanks, Carl. Tim, why don't you stick around?
Okay. If I go with
No, I mean all Tims stick around, please.
If I stay, it will be double.
I was just trying to talk to Tim Hesselsweet. You guys, I can call him directly. It's not a big deal.
All right, I'm
you
out.
guys can stay on. All right, later.
Talk to you later, guys.
So, Tim,
yeah,
thank you so much for the contributions and everything that you've done thus far. I just, like I said, just wanted to touch base with you briefly. I know this has been a long call. Let's schedule